Hello, hello, hello. What's going on, everybody? Can you guys hear me in the YouTube land? Let's get a quick sound, audio, visual check. You guys should just be seeing a blank gold screen, 4-hour chart here. Me in the corner. Should be able to hear me loud and clear if everything's good. Okay, thank you YouTube community for the confirmation. I'm just gonna jump straight into it. Welcome to the Capital Hungry Monday Market Update webinar. Through this next 30 to 40 minutes, I will be giving fundamental and technical analysis as well as trade ideas on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30 stock market index, while looking at what key fundamentals are in play, economic events in focus, market sentiment, and then doing our analysis and trade ideas. In terms of market fundamentals, what we have been seeing over the last period of a month is bearish movement on gold, bearish movement on the stock market, and bullish movement on the US dollar, which has of course led to EURUSD, GBPUSD, and other dollar pairs being a lot more bearish as well. The reason for this is the market and smart money has been adjusting and pricing in the aggressive rate hike rumors by the Federal Reserve. But as we've seen over the last weeks, as these moves have gotten priced in and the market adjusted, we're finally starting to see a pullback on the dollar and short-term bears in play from the highs, which you can see correlated. We're seeing a bounce on the stock markets from new lows, a bounce on gold and pullback from new lows, a bounce on GBP USD and Euro USD from the lows, creating some pullback structure. Okay, so we will be looking to play some of that short-term bearish confluence on the dollar as it's in pullback structure when we do that individual analysis. Overnight, around 4:30 a.m. Eastern into the London session hours, we had Christine Lagarde, the head of the Euro Central Bank, talk about coming out of negative rate hike territory. Her discussing coming out of negative rate hike territory and being a lot more hawkish brought some more individual strength to the euro, especially against the currently weak Japanese yen and US dollar. Okay? Another thing that everybody has to look out for is, of course, understanding that volume and volatility has been relatively lower and slower. You may notice on the lower time frame, way more aggressive whipsaws, way more aggressive pullbacks. So as a manual retail trader, this is something you want to adapt to accordingly. The focus this week is going to be our FOMC meeting minutes and PMI data for major countries around the world, as we want to see the economic health state of these various countries and what it can translate to in terms of central bank action. These are some of the key headlines over the last few sessions. You can see through the London session, we saw euro extend its gains after Christine Lagarde signals the end of negative rates, which is a bullish factor for euro. We also had Fed Bostic come in and talk about more rate hikes to come for the US economy, which that information is already well known and priced in. Then towards the end of the day, we got a little bit more tensions coming to the table with with a discussion from Lavrov of Russia talking about Russia's economic ties with China will be strengthening faster now after the West takes a dictator position, talking about the US. Okay? In terms of market sentiment in the short term, for us as day traders and scalpers, currently we're going to identify dollar weakness and a pullback from the highs. Japanese yen is still fundamentally and technically bearish, as the Bank of Japan is one of the last central banks to still be dovish and keeping their interest rates in the negative. We're also seeing in the stock market a short-term bounce and pullback that we can see extend a little bit deeper before we see more sellers jump back into the market. So the common theme I want to explain to all of you that we're going to be looking to play in the short term when we're looking at gold, GU, EURUSD, USDCAD, and US30 is understanding we're having pullbacks against the current main trend. the main trend over the last month on gold and these other pairs has been bearish. We're starting to see deeper potential for pullbacks and those corrective phases on these pairs before jumping back into the main trend. All right. Something we have to look out for is, of course, the volume and volatility being relatively skewed, not being the highest, as a lot of the market fundamentals from the rate hike discussions, geopolitical tensions with Russia and Ukraine, and other events have been well priced into the market now. Now, when we're coming to do our market sentiment analysis, you can see when we're looking at the dollar index individually, it has been extremely bullish during this period from April onward. The reason it was so bullish is because during an IMF meeting where various central bank heads were there, we had the Federal Reserve signal out a lot more rate hikes to come, which led to this extended rally on the US dollar. But now what we can see, as buyers have printed new higher highs, we're seeing buyers liquidate positions out of the market at a sell side liquidity zone, creating a potential pullback. When we're looking at dollar and how it moves and behaves, this is extremely normal to see buyers consecutively print these higher highs and have these pullback phases that pushes price down to a more favorable demand zone before continuing back bullish. I could personally see, as long as dollar stays below this price point of interest, which this was the last Fed interest rate decision day in FOMC, that even if we have minor pullbacks, we could still see dollar coming to revisit previous highs at 100.86 before seeing more buyers in the market. So in the short term right now, when we're zooming in, we do want to be playing some of this corrective bearish bias on the dollar, as sellers are consecutively printing lower lows, and we could easily see this extend down to 100.8 previous highs before seeing more buyers in play. Thanks to the US dollar being the world reserve currency and business currency, and a lot of the Fed interest rate rumors being priced in, and now seeing this bearish downside move, we can use this correlation to our advantage, as discussed in other webinars, as we can see GBPUSD pulling back from new lows printed, EURUSD pulling back from new lows printed, gold pulling back from intraday lows printed as well, and USDCAD being the more inverse, pulling back from new intraday highs printed. The market sentiment of a lot of the aggressive rate hike rumors by the Fed pricing in is also leading to a more aggressive pullback and cat bounce here on our equity markets. So what we're looking to play in the short term is some potential counter trend trades, meaning I could still see, especially if you watch the top-down analysis on gold and GJ, that when we're looking at gold here, we could still be extending to these previous price sensitivity areas of interest into the 1870s and 1880s before having the continuation down with the overall higher time frame bearish trend. When we're looking at our dollar pairs, for example, GBPUSD, we can at least still be extending up to 2.6 and 2.7 before seeing more sellers into play, dollar strength, and continuing back down. When you're looking at EURUSD, we could easily, now that we're having a more hawkish Euro central bank, bringing some more intraday strength to the euro pairs, the same time we have some dollar softness, we could easily see EURUSD extending up to 1.08, retest of previous lows before continuing more bearish, with USDCAD being the inverse, expecting us to potentially be driving down to 1.27 demand zone before continuing further bullish. And on US equity markets, us continuing up to 32,600, 32,400 before continuing overall bearish. What I'm trying to highlight, and I'm going to be diving into these individual pairs deeper for some more refined technical analysis, is that on US30, on gold, on our dollar pairs like GU and EURUSD, we're just playing some short-term pullback phases as sellers are liquidating positions from the new lows printed and dollar is in pullback before we have more sellers jump back into play with the main trend. You can see this common theme based on market sentiment of the market being more fear-filled regarding the aggressive rate hikes to come, being very similar across the board. When you look at GBPUSD on the higher time frames, we don't want to ignore the overall bearish market structure, and all we've ever had as dollar has been dominant is sellers print consecutive lower lows, very short-lived pullback phases that we have to analyze and adapt to accordingly before jumping in with the main trend of sells and driving price even lower. As especially from the April period onward, the markets have been pricing in more aggressive interest rate hikes to come by the US Federal Reserve. You can see the same pattern when you're looking at EURUSD in its overall movement. You can also see the same pattern on gold ever since the same date of April onward. Does that make sense to everybody? So we are still looking to play some gold pullbacks, some GBPUSD pullbacks, some EURUSD pullbacks, some US30 pullbacks until we reach better sell price sensitivity areas to continue the higher time frame trend. What gives us confirms of this is current dollar softness and weakness, as well as understanding the volatility index is relatively flat, which is showing me a lot less short selling in the equity markets. And when we're looking across various regions around the world, we're starting to see global stock markets start to stabilize a bit. When you're looking at the German DAX here, when you're looking at the UK stock market, when you're looking at the bounce we're having from US30. Okay? Now, let's dive into the individual pair analysis to break down the price action, fundamentals, and technicals at play. When we're looking at gold, remember, the overall structure is still bearish. Even though we're having this aggressive pullback phase from these lows, it's still coming from new lows printed by sellers. It's very normal to see these pullback phases, whether they are short-lived or not, which is really just sellers liquidating positions, pushing price up to a more favorable sell side liquidity zone before collecting more sell orders and continuing overall bearish still, right? So one thing we have to keep in mind here is this pullback has been quite extensive, and where we're starting to get some signs of exhaustion is at these previous lows and sell side liquidity zone around 1865, 1870. I could still see some short-term upside to 1865, 1870, but if we fail to break above here, we do have the potential for sell orders jumping back into the market to potentially continue us further bearish, playing this higher time frame bearish market structure and having sellers consecutively print lower lows on the macro time frame, right? You're going to see this pattern in relation to the market sentiment correlation and the interest rate hike pricing in. You're going to see that's very similar across the board in what I'm trying to highlight to everybody. So when I'm zooming into gold here, if we get a pullback to 1845 and fail to break, still respecting this corrective market structure and pullback from those lows, I would still be looking for some short-term buys to the upside. If we come above 52 and 55, I would still be looking for some short-term buys to the upside. But at 1865, the retest of those previous lows to the left and sell side liquidity zone, I am going to potentially be looking for jumping back into sells from this price sensitivity area if we create a technical double top, which shows us more exhaustion by buyers and sellers jumping in hand. Otherwise, if we just start to trade back below 1836, previous lows, I would be looking to jump back into the higher time frame sells. I would only be looking for any further extended buys if we have breaks above 1876 key level, which would show me that gold is still having a deeper pullback, especially if we analyze our other pairs pulling back from the lows in terms of that market sentiment correlation, and if we understand that dollar stays relatively weaker in the short term, and equities are having a bounce as well, US stock market having a bounce as well. Otherwise, I'm looking to play short-term pullback buys up to 1865 and looking for sells there, or jumping back into sells from 1836, scaling all the way back down to potentially revisit these lows. What we're seeing take place right now, even though it's a deeper extended pullback into this month, is still no different from these scenarios here, where you still have sellers print lower lows. You can enter a pullback phase for an extended period of time, whether it's days or weeks, but as long as you don't break the overall bearish market structure, you come to retest previous sell price sensitivity areas and still have the short orders enter the market, driving you down to the previous lows and lower lows. Does that make sense to everybody? So when we're looking at gold right now, it's no different. The structure is still bearish. We just having a deeper pullback phase on the higher time frame. What I'm really looking at, as I already stated with the price points of interest, is first this potential sell side liquidity zone, right? I can't look for any further buys unless we're like on the higher time frame, unless we're trading above these sell side liquidity zones. Otherwise, if we come, and yes, we can have the short-term buys like I'm talking about, but if we come to that sell side liquidity zone, start to reject and fail, we can see more buyers liquidating positions out and the sellers starting to jump back in, especially if we come back below the 1840s and 1830s, playing that overall bearish market structure and macro fundamental sentiment. Remember, the market moves in waves. You're not just going to have continued downside, but what we can't ignore is that this structure has yet to break, and each of these pullbacks, no matter how aggressive, being hundreds of pips, has still gotten faded out as we retest previous sell side liquidity zones and have sellers consistently print those lower lows. So let me reiterate the trade ideas one more time. I could still see short term, if we do pull back to potentially 45, fail to break, still the short term buys to the upside, breaks above 1852 and 1855 buys, as that's still like 100 pips to revisit that high point before seeing more sellers in the market here, right? Or breaking below 1836. Okay? So short-term pullback buys to potentially revisit better sell zones, or if we just have sellers in play and break below 1836, driving back down to the sells. Now, I'm not some superhero. I'm not some market maker. This is just my prediction and analysis based on fundamentals, technicals, and the market structure, right? The way I would extend any further buys on gold would be if we have break and retests above 65 and 76. So 1865 here, based on the technical price action and what it tells us about order flow, is going to be a make or break price sensitivity area. If we fail to close below the previous lows, sell side liquidity zone, and create a potential double top, then our sell side analysis is still valid to be driving back down. If we have intraday candle closures below, then we have to understand that our analysis for our initial sell side idea is wrong, and we have to adapt accordingly, not marry our bias and look for the continuation buys, as when you're looking at the higher time frame, gold could still be doing deeper pullback plays. For example, The first area of interest I'm looking at is here. But if we break above here, gold could still come into the 1880s and 1890s before seeing a further sell-off. Okay? Does that make sense for everybody on gold analysis, the fundamentals and technicals and trade ideas? So for the time being, this pullback structure from the lows still being respected. Now, when we're looking at GBPUSD, when we're looking at EURUSD, we're playing something very similar. We have this pullback structure being respected. I want to talk about EURUSD first because I can see EURUSD coming up to 1.08 previous lows before seeing more of a sell-off. We have more of a fundamental confluence on EU buys. Told y'all gold wasn't bearish. You know we called gold buys from 45 up to the 60s, right? In that top-down analysis webinar that was just posted like a day and a half ago. We were calling the upside before going back up to better sells. You said gold's going back up to 2,000. We already called these gold buys up to these potential sell points. What a retard. So when we're looking at EURUSD, we have to understand that we're breaking above this potential interest point here at 1.057 because we have individual dollar softness right now, as well as at the same time, we also have a more hawkish Euro central bank. I could still see us going all the way up to 1.08 before seeing any further downside. So I'm going to be personally looking for EURUSD retests of this previous high continuation buys above 1.073 before seeing further sells to the downside. So buys from 1.063 here, retest of previous highs, scaling above the key level, buys above 1.073. Then I'd be looking for back into the higher time frame sells at the retest of previous higher time frame lows at 1.079, 1.08 flat. Otherwise, I would only be jumping back into higher time frame sells well below 1.055 and 1.052. But other than that, what we're looking to play to our advantage on EURUSD is a pullback from the lows, short-term dollar weakness, hawkish Euro central bank as discussed, and potential upside that can still take us to this range of almost 140 pips before seeing some more sellers come back into play. So I still want to play this corrective pullback structure unless we validate dollar buyers coming back into the scene, which I don't personally see yet. We're seeing that very significant pullback on dollar from those highs. Okay? Now, GBPUSD. GBPUSD, you can see very similar idea here, but we don't have as much fundamental reasoning for GBPUSD upside compared to EURUSD. What we have to look out for first is this last price sensitivity area where we saw a lot more sell orders enter the market before seeing us print these lower lows here. So from these last significant lows printed by sellers, we had a short-term pullback phase to collect some more sell side liquidity, driving us down into these lower lows. Based on market structure, we have high probability to see buyers liquidate positions from here and see sellers jumping back in hand, especially if we see some more dollar strength come into play. But otherwise, I can see us having deeper pullback phases to 2.8 before seeing the downside move. So this is going to be our key make or break area at 263. But I'd be looking for pullbacks to 254 And I'd only take further buys above 263. If we reject here, no more buys, start looking to jump back into sells. But I'm expecting, similar to our dollar pairs, that if dollar index continues its bearish pullback, if we see equities have more of a bounce, if we see that Euro USD upside, we can have better risk versus reward sells play out at 1.275, retest of higher time frame bearish market structure and sell side liquidity zone. Otherwise, I'd be jumping back into sells below 251 and 245 if we just get the rejections at this previous sell side price point of interest and bearish market structure price point of interest. Okay. Now, we can understand that when we're looking at our dollar pairs, due to the correlation of the US dollar being the world reserve currency and holding a lot more weight in whatever currency pair it's in, as dollar index is actively in that bearish pullback structure, which can easily drive down to 100.86 before seeing more buyers into the scene, which may come from the FOMC meeting minutes later in the week. You can see USDCAD is more of the inverse of our GU or Euro USD, where from these highs printed by buyers, we're having a deeper pullback phase that can easily drive us back down to this buy side liquidity and demand zone at 1.27 before seeing more buyers in the market. So when I'm looking at USDCAD, if we were to have a pullback to 1.283, I would still be looking for sells, breaks below these current low sells, then looking for buys at 1.27. Anticipating deeper pullback on dollar index, Canadian dollar holding a little bit more strength as oil recovers, would be looking for buys back at these previous lows in demand zone and key level 1.27. Okay. Oh, my mistake. Let me go through that first. Thank you for the reminder. So I forgot to go through what economic events we have on the docket, which is going to be very, very important here. Now, if we want to see the deeper pullback on Euro USD for the upside, if we want to see the deeper pullback on GBPUSD for the upside, and the potential for gold as well. No, gold, sorry, not gold. Just Euro and GBPUSD at this moment. We do want to see that this PMI data, which is an economic grading from various sectors in that economy, is still relatively solid, still above this forecast, right? So at 3:15 a.m. Eastern during our London session, we have manufacturing for services sector, PMI for manufacturing, services sector, and composite for France, which is going to be impacting your euro pairs. At 3:30, we have the same set of PMI data, but for Germany, which is going to be impacting your euro pairs. They're expecting small, slight declines, but I still think it can be a bit better than this forecast and still keep euro relatively a bit more bullish. But in my opinion, on the euro side, even if this data is a bit weaker, I still think it's going to signal at more rate hikes to come from the Euro Central Bank anyways, as that sentiment's holding more weight. So I think that regardless, this euro data from 3:15 a.m. till 4 a.m. Eastern, with Eurozone overall being at 4 a.m. Eastern, may lead to a short-lived pullback on euro before continuing further bullish to those better sell price points of interest. Okay? With GBP though, I'm expecting a little bit of weaker data for GBP, so this may cause some intraday ranging on GU as well as GJ. Then in the morning during our North American trading session, we have the US economic data and the US PMI. I'm still expecting this US PMI to be bad, but with the dollar and this leading to more dollar weakness, which can lead up to Euro USD pushing up, GBP USD pushing up, and this data being bad, giving us that continued pullback on gold for a bit more upside before seeing sellers jump back into play. In terms of central bankers and political speakers, we have a lot of central bankers tomorrow scattered throughout the day from various regions like Euro Central Bank. We got Joe Biden talking in Japan. We got some Federal Reserve speakers throughout the day as well. So keep an eye out on your news terminals, newsroom, Capital Hungry News Twitter for a lot of headlines from central bank speakers and politicians scattered throughout the day tomorrow. Okay. Now, US 30. On US 30, I could still see us having this extended squeeze to the upside with buyers trying to squeeze out as much as they can out of the stock market, going up to 32,200 before seeing more sells. 31,500 buys, breaks above 31,900 buys. I'd be potentially looking for some sells at 32,200 retest area here, still playing the higher time frame bearish market structure. Yes, sir. Sorry, I thought I got muted for a second, but it's all good. Last but not least, GBPJPY. So when we're looking at the yen, the reason we had a little bit of downside on GJ was in relation to the safe haven currency Japanese yen just having a pullback from new lows printed. What we expected is yen could at least revisit this last previous sell side liquidity zone where we had sellers print lower lows, a short-term pullback phase that led into these even new lows here, right? If yen individually, when you're looking at the yen currency index, doesn't break above 78.5, I am starting to see the bears come back into play, going back to revisit these lows as VIX is bearish, yen is still bearish on the higher time frames, and we're also starting to see UK equities recover a bit more as well. Okay, so when we're coming to look at GBPJPY, if you guys want some more information, like a lot more information on GJ and gold, just come to the Capital Hungry YouTube page, like this free channel, and I just did full in-depth breakdowns, right? This is more some intraday analysis, market update, giving trade ideas across the board. But if you want full analysis on gold and GJ, make sure you check out the updates I just did recently. Right here, live top-down analysis GJ and gold. Anybody who's watched this, I guarantee can preach for me and let you know that it's extremely informative. Anybody here in the chat get a chance to watch that gold breakdown or GJ or no? Anyways, GJ higher time frames is still extremely bullish. What we had take place is buyers print a higher high and just having a short-term pullback phase the same time that we had Japanese yen holding a bit more strength as well. But you can see we're coming to revisit these previous highs here around 156, showing a lot more exhaustion by sellers and buyers jumping back into the market. As long as we see the recovery in UK equities, as long as we have decent UK PMI data, as long as we have Japanese yen turning back bearish, we have a lot of potential where minus some pullbacks, we can see a continuation with the trend to revisit these highs. You can see majority of GJ's pullbacks have been relatively short-lived, right? As we still continue that sentiment from a macro standpoint of a hawkish Bank of England who's hiking interest rates, which is positive for the British pound, But when you're looking at the Japanese yen, the Bank of Japan is still dovish. They're still keeping interest rates in the negative. So I'm going to be using the correlation of seeing investor confidence in the UK markets if we can assess UK equities continuing bullish. If we see Japanese yen flip bearish with its overall higher time frame trend, with just this being a minor pullback phase, then I can easily anticipate that on GJ here, this new daily candle might come and make a little bit of a lower wick, but as long as we're trading above this demand zone at the 160s, we have a lot of potential to start flipping bullish and continuing a lot higher on the higher time frame. So let's bring that together here with some of the intraday time frames. On GJ, if we get pullbacks to 160, would still be looking for buys. Scaling back above, buys above 161, buys above 161.2. This would be retesting some intraday bullish market structure forming. We still have the potential to revisit these higher highs. We still have individual Japanese yen weakness. We still have UK equities having a dead cat bounce, trying to squeeze as much as they can. We don't have any new market fear, uncertainty, or doubt in the markets as well. I would only be switching this bias into GJ sells below 159.5. If we have Japanese yen pick up strength, drop in UK stock market, GJ break below 159.5, then my buy analysis is wrong. We have to adapt accordingly, not marry our first bias, and I'd only be jumping in sells below 159.5. Okay? So let's run through a quick summary, shall we? We understand the fundamentals that we're currently looking to play is a little bit of a correction against main trends we've been observing on gold, dollar pairs, and stock market. A lot of the interest rate hike rumors by the Federal Reserve has been priced into the market. So we're playing a short-term pullback on the dollar index from highs and playing short-term bears on the dollar, which we're looking to correlate with some potential pullback buys on GU, pullback buys on EURUSD, a little bit more downside on USDCAD, and pullback buys on US30. Remember, this is corrections, pullbacks of the main trend. We are manual retail traders, scalpers, day traders, intraday traders. These market waves, pullback phases, corrective phases, consolidations, we have to adapt to it accordingly, right? What we've also seen over the London session is the Euro Central Bank bring more hawkish remarks from Christine Lagarde, which led to even more euro strength we can play to our advantage. Our focus is all of that PMI data coming out overnight for the Eurozone, UK, and US. Okay? Market sentiment, I'm anticipating some continued short-term dollar bears, higher time frame Japanese yen bears, and short-term equities bounce. What we're looking to play in our overall trend on gold, on dollar pairs, on EURUSD, on US30 is short-term upside until we see the higher time frame sellers come back into play to continue the higher time frame trend. Is everybody understanding that? What we're seeing across the board is those pullback phases against the main trend. So in relation to US30, we're in this pullback phase. in relation to Euro USD, we're in this pullback phase against higher time frame bearish trend. In relation to GBPUSD, we're in this pullback phase against higher time frame bearish trend. In relation to gold, we are in this pullback phase in relation to higher time frame trend. All right, I just want to make sure that nobody starts to marry a bias thinking GU is going to go to the moon, Euro USD is going to go to the moon, gold's going to go back to 2000. It's not going to happen unless we have a new fundamental catalyst come into play, right? We're just playing some short-term pullback phases against the higher time frame trend until we can identify price action confirms an exhaustion to jump back into the higher time frame trend. Except on GJ, which we're still playing the higher time frame bullish structure on GJ here. Does that make sense to everybody in the chat? Make sure you guys stay hydrated. Right? Remember, dollar correlation to the dollar pairs. We're just playing some short-term bears on the dollar. Obviously, the higher time frame on the dollar's bullish as hell. But the market moves in phases. We have to adapt to these phases accordingly. Right now, dollar is in this bearish short-term pullback phase, which can easily come down to 100.8 before seeing more buys to the upside. Okay, so my main takeaway points are stay very adaptive. When you're trading your dollar pairs, make sure you're analyzing dollar index movement. When you're trading gold, make sure you're watching any headlines for any new fear to come into play. Now, also, this is something else I want to include, one more thing. A lot of the fundamental fear has been priced into the market. COVID's priced in. The Russia-Ukraine tensions are priced in. The interest rate hikes for the feds, they've been getting priced in as well. If we want to see more fear in the markets, in dollar exploding back to highs, Japanese yen strength, and gold turning bullish again on the higher time frames, this is what we'll need fundamentally. Any of these events, listen carefully, that's going to bring new fear to the markets. Ready? 1. If we see physical military escalations with Russia and Ukraine and NATO countries get involved, that's number 1, right? If we start to see the US provide military support and start to send the military into Ukraine to fight Russia, that's number 1. Number 2, China and Taiwan. If China starts to physically invade Taiwan, that will bring new market fear. The US will get involved, right? Number 3, if the central banks start to reverse their rate hike talks and talk about cutting rates again, that would bring gold back bullish and so forth. That would keep dollar softer though, right? Number 4, if this monkeypox bullshit, if it leads to lockdowns globally, that will also bring new fear. Does that make sense to everybody? So right now, monkeypox news is noise. No market impact because it's not impacting economies. Russia-Ukraine headlines, noise. It's already been priced in, already well known about the invasion. China and Taiwan tensions, noise. It's not an actual invasion yet, right? But if we see world war start to develop with Russia and Ukraine, China start to invade Taiwan from a military perspective, monkeypox lead into actual lockdowns impacting economies, then you're going to see Japanese yen strength, then you're going to see stock market bears, then you're going to see gold go further bullish and so forth. Does that make sense to everybody? I just want to give you guys that heads up. So if you see the news come out and China start to invade Taiwan, you know what to expect. If you start to see US get involved from a military standpoint to help Ukraine and send their military over, you know what to expect. If this monkeypox bullshit leads to lockdowns, you know what to expect. All right, everybody? So I just wanted to give you guys that reminder at the end right now. Otherwise, the COVID stuff is priced in, Brexit's priced in, Russia and Ukraine tensions are priced in, monkeypox is noise at the moment, China and Taiwan are starting to escalate a little bit, but still noise. All right? For anybody asking about reliable news sources, check out the Capital Hungry News Twitter. It's posted over 30,000 news headlines already. All right? Make sure you guys give a chance and check out the description. Free Telegram channel, free Telegram analysis channel. This YouTube page with hundreds of webinars better than any marketer, any IG guru. The Twitter news headline Twitter as well. All right? Okay, everybody. So remember, make sure you stay adaptive. Make sure you adapt to the current volume and volatility. Playing the current pullbacks until we jump back in the higher time frame trend. Watch your risk management, watch your psychology, and I will see all of you next time. And make sure you check out that GJ and Gold top-down breakdown. Very in-depth, very informative, very educational. All right, everybody, thank you for your time. I don't want to make this too long as it's supposed to be just a trade ideas webinar. So I'll see all of you next time. I'll probably be doing a New York scalping session on Wednesday or Thursday, or I'll be on Raja streams, Wix Don't Lie stream. For those of you who don't know, I got recently diagnosed with an autoimmune disease called ulcerative colitis that basically causes a lot of inflammation in my intestines, bleeding, wounds, fucked up to eat, fucked up to absorb food. So I personally haven't been trading as much or like as active on Raja streams. I've just been more focused on changing my lifestyle and dealing with this better and healing it. So I've been personally on a trading break and trying to have less stress and focus on healing. But I will be on Raja streams more often in the near future. All right. So for anybody who's wondering why I haven't traded this last couple of weeks, or why I've been a little bit more quiet, is because I've been dealing with this. All right, everybody? But you guys know I'm a fucking warrior. I'm a beast. I'll be okay. I just need to be disciplined and change my lifestyle and deal with this. Then I can go back to trading again and deal with all of that, right? But anyways, I still want to do content for you guys on YouTube. I still want to do content for you guys, whether it's paid in the private channel, whether it's paid on YouTube. I still want to do what I can. All right? So I'll see all of you next time. Take care. Have a great day.